President-elect Donald Trump repeatedly promised harsh tariffs on the campaign trail, and with the unified Republican government now a reality, it seems likely they and perhaps inflation will follow. The result could be fewer rate cuts by the Fed, something Jay Powell hinted at earlier today during a speech to the Federal Reserve Bank of Dallas. Powell saying, quote, "The economy is not sending any signals that we need to be in a hurry to lower rates. The strength we're currently seeing in the economy gives us the ability to approach our decisions carefully." Joining us now, David Seif, Nomura chief economist for developed markets. And Powell's comments there specifically, not even alluding necessarily to the fiscal policy that may be coming down the pike, but just sort of the current status of the economy. You guys were just out with a note and you said maybe we could see one cut next year.
Yeah, so we think that the election of Trump and the likely imposition of tariffs really is a game changer for Fed policy in 2025. We still expect the Fed to cut in December, although I think there is some question as to whether it will follow through on that. And we expect then a cut in March, and then we think that's going to be it for 2025. And that's really due to the fact, one, that we are already seeing a decent amount of strength in the economy, and then two, that we think that the tariffs are likely to add an inflationary impulse that hits by the middle of 2025 and forces the Fed to not cut as much.
But David, when you try to model this out, what's your base case of what tariffs? What do you actually think comes? I mean, is it something? Do the policies match the rhetoric? I guess is what I'm trying to ask.
You know, by and large, we think they do. This is Trump's second term, and we think he moved quite slowly on tariffs in his first term, focused on other priorities at first, but it was a real centerpiece of his campaign. And already talk about bringing Bob Lighthizer back in some role, others who are certainly in the pro-tariff camp. And we think he's going to hit the ground running, very much like he said.
Yeah, just to play devil's advocate, we've had other strategists come on the show. And they take, I'll give you their argument, which they say they actually are telling their clients they think the policies, and we're all taking our best guess here, right? But they think the policies will be more moderate and orthodox than the rhetoric. Because I guess their point was purely from a position of self-interest. I mean, Trump wants to succeed, and therefore he's going to want to maintain some level of just market and economic stability to do so.
Well, I think that there's a question between or a difference between what I would say the quote-unquote mainstream economists believe and what our view is, which is in line with that, and what I believe Donald Trump's view is. And what Trump's view is what really matters. Trump has surrounded himself with economists who have a different view about the efficacy of tariffs and I think the longer run impacts, the benefits of them. And given that this is who he's surrounding himself with, I think we would.
But aren't there, David, there are other guys too. I mean, it's Jay Clayton's there, Kevin Hassett, Howard Lutnick. These are advisors, formal and informal. I mean, those are market-friendly guys.
These are market-friendly guys, and there's a lot of very market-friendly policies that we think Trump is going to come out with. A full renewal of his tax cuts. Of course, that would also, compared to letting them expire, be somewhat inflationary. Deregulation. So it's not as though we think he's going to come in and do a bunch of stuff that really detracts from the economy all in. But the tariffs are something we really do believe he's going to do, and I think that it's the USTR more than the Treasury, more than other areas that really are the linchpin for putting these into place. If he picks Bob Lighthizer or someone similar to him, we think he's going to move ahead with this, and I think it would be a mistake to not take him at his word on this.
There are also some economists who have said, okay, so maybe the tariffs go into place, but it's a one-time effect, and then it's used as a negotiating tactic to achieve whatever ends the administration wants to achieve, and therefore it would not factor in as much into inflation, into the Fed's calculus of inflation.
Well, I think it's hard to argue that it wouldn't, if we have the effect right, that it wouldn't enter into inflation in the second half, so to speak, or in the by the second half of next year. But I think that the question is, how should the Fed react? Even if it's a one-time move up in prices, I still think the Fed will have to react to that. This is a post-COVID, post-2021 world. Transitory inflation had not entered the lexicon prior to COVID during Trump's first term when he put those tariffs into place. And I think the risk is very much like what happened with the post-COVID inflation, that if the Fed does not react to what could be a one-time move in the price level. Then you start to get these second round effects where wages start to go up, et cetera, and you could lose control and have a situation akin to 2021, 2022 again.
So does that then also set up the Federal Reserve, if it's not going to cut as much, does it set up a battle between Powell and Trump, right? A battle that Powell has made very clear he does not want. He is very clear that the Fed's sticking to its mission. But is that something that would perhaps be a result and cause then some, the markets to be unsettled, for example?
It wouldn't shock me at all if there's a lot of harsh rhetoric coming from Trump and others in the administration towards the Fed. I mean, there was in Trump's first term, and I think this would only be that much worse. I doubt that Powell will really engage in that sort of rhetoric. I think that Powell would simply say, hey, here's what the inflation data show. We're reacting to the inflation data and go from there. But yes, I think that a much more contentious relationship could easily develop.
The one other thing I want to ask you about is the U.S. debt position, because there have been all of these estimates that the deficit will go much higher under Trump if he does indeed enact all these policies we've been talking about. We've been talking about the deficits in the U.S. as an issue for many, many years now. It hasn't been a problem for the market, for the economy necessarily. What would change that?
Well, the tariffs are going to collect a decent amount of money,
right,
and that money ultimately will go to the Treasury. So somewhat surprisingly, maybe, it would seem that we actually think that the deficit will be a little bit lower in 2025 and 2026 than it otherwise would have been. By 2027, however, we don't think that this will outweigh the renewal of the Trump tax cuts. So starting in the third year of Trump's second term into the fourth year and thereafter, we do think the deficit will be more than 1% of GDP per year higher than it would have been. So a significant amount. But I would say that this is sort of a situation where we already have deficits at such high levels that I do think that at some point in the future, whenever that is, this will matter. There isn't anything that sort of stands out as, hey, this is going to be the sudden moment when it happens. So I think the U.S. could easily be able to get away with this for a considerable period of time before it happens. And just to be clear, these are policies that have been bipartisan. We have a deficit that's well over 5% of GDP already. If Trump's policies in his third and fourth year add 1% of GDP to that, that is, so to speak, a drop in the bucket compared to what is already there.
Right.
David, thank you so much for dropping by today. Great discussion.
My pleasure.
Appreciate it.
My pleasure.